Investors are keen to spend their money on Singapore's long-term infrastructure. The first release of Singa bonds has been more than 1.5 times oversubscribed. Brandon Tanoto tells us more.
The 30-year bonds are the first batch of bonds to be sold under the Significant Infrastructure Government Loan Act. Now, the Act was passed by Parliament in May to allow the government to borrow up to $90 billion over the next 15 years. Now, the money raised will fund major projects like the new Cross Island and Jurong regional MRT lines, as well as tidal walls to protect Singapore against rising sea levels. Market watchers say Singapore's AAA credit rating makes government bonds like the Singa bonds safe investments to hold. The high rating signalling that it's extremely unlikely for the government to default on its payments.
There really are very few economies that have this kind of characteristics. In fact, if you look pre- and post-pandemic, right, most other economies will have serious fiscal challenges, whereas we have reserves. So our AAA is secure.
$2.6 billion worth of the Singa bonds was sold on Monday. And with investor bids coming in at $4.1 billion, analysts expect demand to stay strong for subsequent sales of the bonds.
There's a portion of investors out there who went away unhappy that they didn't get what they bid for in the auction. So there is sort of nascent demand there already. A lot of this is institutional investment on behalf of pension funds, insurance companies. It's not mum and dad, buying a small sort of pocket of bonds for their own investment.
Payments will be made twice yearly at an interest rate of 1.875% per annum. The bonds will be issued for trade in the secondary market from Friday.